So chapter 12 is going to be talking about payroll. Of course, with all businesses that we are looking into as a sole proprietor, the main thing and the one thing that you should have, because you never want to do this work alone, is employees. Okay? You need to know how to set up payroll. All right, so introducing to you payroll, what are the things that we're going to be looking in for is first off, when a business has employees, you need to create a list of things that you need to calculate. Number one thing is, how much are you planning to compensate them for? And you also need to make a decision. Are they going to be salary based or are they going to be wage basis? So you want to make sure that you find that you determine what your company has and what are you going to compensate them for. Second thing is you're going to be looking at what taxes that employees have. So again, with sole proprietors and small businesses, you're only going to be dealing with one or two taxes at most for having employees. Especially, you need to tax them for obviously their income, which is the federal, and we'll talk about that. And second of all, you're going to have to also pay your taxes for even having employees, period. All right? And we'll talk about that, what those entail. Third thing is you're going to be looking at what benefits that you are going to be providing for your employees. And lastly, what other deductions can you take away from their paycheck, right? If they're meals, if you provide meals, that's a deduction to their paycheck, right? And we'll talk about more about that in detail in the next couple slides. So first off, we have to establish the number one thing, all right? In order to even have employees, you are required to have an employer identification number. Okay, so let's look at the right side real quick. So what this employer identification number is basically your tax ID number. Okay, when you start a business, that's the very first thing that you are going to be applying for, and you must apply for it. Okay, because again, it's that concept for business and economics. You need to have a separate identification number for your business to take its proper taxes and et cetera, instead of using your social security, which we know is on an individual basis, right? It's basically a number that identifies us and how they look. They look pretty similar to each other. However, any type of businesses, you're going to go to the IRS and you're going to apply for an employer identification number. The same thing happens. It's 9 digits long. However, 10 digits long. The way it looks is that it's usually 2 digits first and then the rest of the digits come afterwards. Your social security, again, is on a individual basis. Okay, it's based on an individual account, and you need to collect this information from every single employee that you employ, right? Because that's how you are going to calculate their taxes for whatever money that they earn and properly file it to the federal agency. Okay. And so a social security, pretty much it's straightforward. You got three in the middle. You got 3, 2, and then 4. So wait, I was right. It is 9, not 10. 9 digits, but it goes in 3, 2, then 4. But for employer identification, it's 2, and then the rest are the 7 numbers that identify you as an employer. So again, both of them are going to come from the IRS. Specifically, Social Security cards come from the Social Security Administration. And how you apply for them is pretty straightforward, okay? Yes. So that's the difference that you need to have and you need to know. Sole proprietor. Yes, you can get away with applying your own personal social security number because you and the business are one. However, when you are finally having employees, you don't want to hold that responsibility to pay for those taxes on your personal ID number. You want to establish a separate business identity, employer identification number. So, rule of thumb, the minute you open up your business, you must apply for the IRS your employee identification number. Now, how do you apply? Now, the form here, you go to irs.gov and you search up the SS4 form. And basically, it just gives you, it just gives you a form that allows you to apply what your legal business name is, XYZ. So you need to establish that you're a business first before applying for this IRS. So this actually might be one of the steps that you must have in order to actually start operating your business. You must apply for one ASAP. Okay, and again, if you operate however way that you want to operate, you establish it right here in this form, right? Whatever that your business license has, you're going to copy all the information into this form, and it should take anywhere from, depending on which agency or which IRS that you're going for and how quickly they process the paperwork will be to determine when you need to actually receive this employer identification number. So again, this is where you would apply for if you are required to either do employment, right? Or if you are trying to excise your taxes, and then if you are in alcohol or you serve alcohol or tobacco, right? Or you sell it, you definitely need to have a separate employer identification number. Okay, so that's the form where you need to sign up for one. Okay. Now, with that being said, we need to deal with our employees. Okay. First off, in this case, there are 6 different types of employees. However, in this class, we're only going to be focusing on the primary 2. But don't worry, in this class, I will briefly talk about every single type of employee. However, for the sake of payroll, the only employees that are going to be actually considered as an established employee that's going to be under your payroll system is going to be your common law, which is your regular employees, as well as your statutory employees. All other types of employees are going to be considered as your expenses. So we'll talk about independent contractors, leased employees, okay? How they function kind of separately, and you only pay them as separate expense. They're not your employees. You do not provide any benefits or anything to them. They're just an expense to you as far as the business, okay? So again, the only employees that you can be on payroll is going to be your common law and your statutory employees, okay? So I'm going to go ahead and talk about each and every single one. So the very first one is your common law employee. What can they do for you? Okay. First off, common law is pretty straightforward. They're your regular daily 9 to 5, or if they're salary based, they're the typical employees that actually work for your company. And how they work is they are, how they determine what their tasks are is the boss gives them a list of tasks of duties and what they need to do. And the employee must follow how it's done, when it's done, and et cetera, et cetera. So everything is going to be determined based on the amount of power and control that the employer has over the employee. Okay? So in this case, again, they tell you what the task is. They tell you how to get it done. They tell you when to get it done. And they give you specific and it's given to a specific person. So again, any employee that has a special name or a specific position, you are going to be most likely a common law employee. So again, you're given the task, you know exactly what the task is, you're given how the task is done, when it's done, right? And that is your common law employee. Statutory employees, they are going to be the employees that they do work for your company. However, the task that they're given is going to be a little different than the one that is commonly used, or regular employees, right? The regular employees, their task is to be doing this, and they have to do it every day. So that person knows what their task is at any given moment. Statutory employees are slightly different. However, they are employees to you, right? And an example of that would be a delivery truck person, okay? They're given a task, they're given how it is done, and they're given when to have it done. However, their one common way to kind of understand this concept is they do not need to report to the office every single day. So they kind of have their own days where they have days off, or they have their other leeways of maybe the task doesn't need to be done at this very moment. So that's what I mean when they're statutory employees. They are part of your company. However, it's not a daily task that needs to be done. So it's a task that's just given. I need this done. All right, you do it. Okay. So with that being said, again, example is going to be a delivery truck man, a full-time life insurance. So what they do is they sell insurance that's part of your company. They sell your product. However, they themselves, the task is given on whenever they want to complete the task, right? So with that being said, that's a statutory employee for you. Okay, so they're people that work for your company, but they're not a regular. They don't need to come into the office every single day and do the same exact task every day. It's based on circumstances and whether I need you or not. Okay, but they are part of that. Now, with that, the difference between them is going to be how you actually calculate taxes for them. So for a common law employee, and we'll talk about what these taxes and deductions are going to entail, they must be taxed, or they must withhold federal income tax withholdings, okay? And we'll talk about what that is, okay? And we also must withhold any taxes for benefits or anything such as FICA, right? Social Security and Medicare. And we'll talk about that further down in the PowerPoint. Where your statutory employees, they are actually not withheld at the income level. So whatever the amount that they earn for the income, they do not get taxed on it. But one thing that they do need to be taxed is going to be for their FICA, which is their Social Security, and their Medicare. So that's the true underlying difference, right? You got someone who's constantly working for you every single day, and then we have someone who's only given a task every once in a while, right? And they only work when the task is given. So their income is not going to be ever taxed. So that's the only difference between these two, common law and statutory. However, these two people, or these two types of employees, will appear on your payroll. Okay? Any questions in regards to these specific employees?
Question on the statutory employees. Is this more or less referred to the sales agents, things like that? So whatever income that they have earned during the time, if they earned anything, say for example for this whole month, yes, like they are sales agents, if nothing was earned or they were not productive with that, nothing is to be reported basically. Is that how it is?
So with statutory employees, right, they are the sales representative. And what we can give them to them is we can give them commission, right? So for whatever sale that they get, they can make a profit on their own, but we do not tax them for that. It's whatever they earn. So that's a good example. Yes. And right here I have a sales representative. So anybody who's trying to sell our products, we could give them a cut of whatever profit that they make a sale from. So like I said, um, common common benefits, I guess, would be for statutory employees would be the benefit of commissions. Okay. But again, it just depends on how they apply themselves, right? Whether we allow them to have a W-2 or a W-4 form. And if we do, then they are officially part of our business. But if we do not give them the W-2 or W-4 form, they're not considered. Okay? And we'll talk more about that once we get further down. And we'll, after this. Okay? Good question. Good question. Right? So now I'm going to be talking about the other types of employees, okay, that do exist and are actually commonly practiced. So for example, our first one is going to be statutory non-employees, okay? So what statutory non-employees do is they're treated as if they are self-employed. Okay, so all federal tax purposes, right, is going to be included on their income statement. And so whatever they collect, right, they're considered an expense. All of these employees are considered expenses. So that means all the money that they earn, it's theirs. They don't get taxed until they have to file their 1099 form, right? They're considered independent contractors, right? In some kind of form. But what they are typically would be like a real estate agency, right? They are in it for themselves, but they are working for a company. But they're not going to be based on, they're going to be based on whatever they sell or whoever their customer is. So it's very, 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 very similar to like direct sellers or people who just are trying to sell a product to you, right? And they must fill out a 1099 form, which is the form to be legally self-employed, okay? And they are liable for income tax withholdings for themselves, all right? And they must hold off their own federal Social Security and Medicare taxes themselves, okay? And again, I put a little note here. Section 3500 at the IRS is going to be for the rates on what statutory non-employees actually have to tax themselves for. So this one and an independent contractor are pretty much very, 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 very similar. Okay? So again, independent contractors, okay, they're also considered as their own individual, self-employed. However, they do control on what the end result is. They're given a task, but they control on what the end result is. So most typical examples will be doctors, any dentists, any vets, right? You see a specific person, right? They all are in the business of doing one thing and one thing only, right? They're trying to help the customer what they need, right? For doctors, especially for patients, right? They need a medical checkup. Every doctor can do their own job, right? And it depends on which doctor you go to, right? And they control what the end result is. If this person says this person needs to get a full assessment, and this other person says, nah, they just need to just get their blood test. See, you understand the difference between them is that they're all doing the same thing. They're all doing one whole entire task, but how they handle it is going to be different for each person, and that's what the independent contractors usually are. They determine what the end result is, but the task at hand is given to all of them, and they're exactly the same. Okay, and they also too have to fill out a 1099 form as an independent contractor. So on that form, I don't have it on here, but because we're focusing on mainly payroll. But if you guys go on irs.gov, the 1099 form, if you've ever done it before, you have the option to either choose self-employment or independent contractor. All right. And again, they have no income or federal tax withholdings, right? But however, they do have to pay their own personal business taxes at the end of the year. They need to submit their own separate taxes at the end of the year. Okay. And then lastly, the last two sections that we're looking for is going to be temporary agency workers or leased workers. So these two kind of go hand in hand. For example, a temporary agency worker. So if you guys heard of Robert Half, they are a temporary agency or a temporary work agency, right? They are the ones that find work for the individual, okay? The big companies, they pay Robert Half to find these individuals to work for those people. And usually it's a temporary project or it's a very small temporary job. So it can last from anywhere from 3 months or they could last for a whole year. And they are contracted as a temporary work, okay? So with that being said, again, you're working for the agency, not the actual company. So you're contracted to the company and you're being paid by the company who contracted you. Okay? And so here, they do not pay their workers. The company does not pay the workers. The agency pays them for whatever the task was. Okay? Again, they are not liable for any income tax or social security or Medicare, right? With these kind of people, they don't get any benefits. Okay, you work as a temporary agency, you're only working to make the money that you earn and you get the full check, no tax taken out of it. So you get a benefit there. But if you work as a temporary agency, what you need to know is at the end of the day, you need to pay those taxes at the end of your term. Okay, so you actually need to pay taxes unless you choose for the agency to take those taxes out from you. But again, they are completely separate. They're temporary workers. They get the full paycheck for whatever amount that they're paying for. So they need to save that money at the end of the year to pay the taxes. Leased employees are typically people that actually come from either the temporary work agencies or they're referred from a different agency. So what these leased employees are is if they do come from the temporary agency, the positive thing is that they can be selected as a candidate to actually work for the company. So that's the difference between leased and a temporary. Temporary, you're only getting the job and the task done. Leased is if the company likes you, they'll buy out the contract from the temporary agency. So then they transfer you as their either employee or independent contractor, depending on what they want to take you in as. Okay, so that's the difference. You're working for the temporary agency, however, the possibility of someone buying out the contract and working for the actual company is possible. So for example, MGM typically does leased employees. They pay the big bucks to these temporary agencies, and if that person works for the company as a temporary agency, they look at them, this employee is great, I'm going to buy your contract out, okay? So that's typical for MGM places like that, okay? They're more likely to buy them out of the contract, okay? And again, they do not get paid by the workers, of course. The agency or whoever referred them is going to be paying them as for their job. But however, when you do get bought out of their contract, whether you're in an independent contractor or an actual employee, that's when the company starts actually paying you. But you are not actually being paid. The agency is going to pay you. Okay, so they're not, again, not liable for any income or Social Security or Medicare benefits. Okay, so again, leased employees, they need to save that portion at the end of the check so they can pay taxes to the IRS. All right. Any questions in regards to any of the 6 types of employees that we talked about?
No.
Okay. So again, we are only focusing on 2 types of employees: our common law, which is our regular, and our statutory employees, which again, where this whole entire chapter is talking about payroll. The other 4 people or the other 4 types of employees are all going to be expenses to your company. So first off, we're going to introduce you to payroll and what are the steps necessary to in order for you to actually successfully do payroll by hand. Okay, it's good to know in case you are looking into what these payroll companies actually do, or if you are a small company and you are doing payroll by hand, you can see how difficult the process is for actually filing the payroll process. And you have to do this every single week depending on your payroll period, right? Whether you pay every day or whether you pay every week. All right? And we'll talk about more about that in a minute. Okay? So for the first one is we're going to be looking at each side. So we're looking at the employee side, and then we're going to be looking at the employer side. So first, the employees. We need to, first off, submit any new employee to the state or local agency that your business is running for, right? Then step 2 is we're going to collect W-4 forms. Step 3 is to determine their actual payroll period and how much are you actually going to pay them. Step 4 is you're going to calculate their income tax withholdings and any benefits or tax deductions. And then lastly, step 5 is you're going to record and pay the employee. All right? So that's just the steps for employee. On the other hand, once you've completed the employee taxes, now you need to incur employer taxes, right? Which we can include calculating any company FICA. So again, most companies, I'm pretty sure 95% of the companies must and have to pay for whatever portion that they take from their employees. They must match them, if not 100%. Okay? So again, we'll talk about what FICA is. So whatever amount that they put into their Social Security or for their Medicare, the company needs to match them 100%. Okay? Other things that we will encounter is federal unemployment tax and state unemployment tax. Other things that we will also see in this course is going to be workers' compensation. All right, we'll talk about that once we go further down. Okay? Once we record our taxes, then we determine what date that we're going to actually pay our federal and state agencies for these taxes that must be paid in order to have employees. So again, let's walk through step 1 at a time, okay? So step number 1 is to submit the employees to the state, okay? So for our state of Nevada, we have the Department of Employees, Training, and Resources, okay? Or I'm sorry, Rehabilitation. All right, also known as DETR. Most of you have come from DETR or from One Stop. They work hand in hand together because they are the Department of Employment, right? So these are the people that we also too must report to the state or local federal agency, whichever one you go to, and report who our employees are. because the important thing is when you have these employees, you need to recognize them and you need to start taking tax out of their first paycheck immediately. You can have employees under the table, but remember, if you do that, you can get in trouble for that, especially if you're paying them under the table. Where are you going to be reporting those salaries and wages? Okay? Take that for that instance, for example, right? You're not going to be writing $10,000 off every single, 3 months because you have an employee that's under the table. No. The proper way to do it is to file this form right here, okay? It's the W-2 form for the employer to submit to Dieter, all right? And basically what you need to do is you need to collect all the information, their full legal name, each employee's social security numbers, and what their task is, okay? And how much wages are you willing to pay them, whether they're wages or salary, right? You need to establish that as well. So this form goes into the state so they know that you've got new employees and that they need to start preparing to expect money from you for having these employees, right? That's step number 1, right? So then step number 2 is, what is a W-4 form? Okay, a W-4 form, okay? So this is the updated one. This is the new W-4 form for the 2020. It looks very different. If you guys are looking for a job as of 2020, you need to fill this form out. And it's completely different than the one that we're going to be looking at in order to calculate payroll, okay? So again, this is going to ask you for your legal name, right? It's going to ask you for your social security number as well. And it's going to ask you a bunch of questions in regards to your employment, whether you have children, what your dependents, XYZ, and what kind of withholdings, things that you can, or deductibles that you can take out of your actual income, right? So that is what that is. Now, the employer must collect a W-4 form from each employee. Failure to collect that, or failure to even submit one, if you're the employee, you will be taxed at the highest bracket, with the lowest withholdings, and you are going to be basically taxed at the highest amount, because with this form that you submit, it's also allowing the employer to know what you want to be deducted from your paycheck and what you want to, and what should be taken away from your paycheck, okay? So a lot of times, if you do submit this form and you do take these deductions, what happens is at the end of the year, when you file your taxes, you may most likely, if you're, if you're having a lot of withholdings, you're more likely to have to pay back the IRS because you took that money ahead of time. Whereas if you just had the government just take all the taxes out, you're more likely to get a tax refund. Okay? So that's a little nifty thing for this purposes, okay? Now, what I'm going to show you is the difference between the two forms that we will be looking at here. So this one is going to be the 2019, all right? So this one's a lot easier to fill, and if you have filled it before, this form has been the same for the last 10 years, I believe, okay? So this one is assuming that, right, it's just you fill out your legal name, your social security number, your address, XYZ, right? Now, what this entails is it shows you it gives you pretty much a summary of what the withholdings that you want to claim, all right? So the second page is going to ask you, well, what do you want to claim? And that's where you check mark here. So for every item that you check, you get one withholding. So for example, if I am, if I want to collect or, what is it? If I want to claim myself, there is one tax withholding, right? If I have dependents or children, they consider one per children. And you can only have a maximum of 10 children that you can actually claim. You know, FYI. You can also claim if you're the head of the household. Okay? Anything like that, this is where it's going to be collected. And what you're going to do is, on your first page, you're going to add up the total amount of numbers that you've collected, and you're going to have a total of your withholdings right here. Simple, straightforward, easy. But because we live in the day of age of 2020, here we look at the brand new form for the 2020. Now, with this one, this form is very different. It's not calculated based on how many withholdings you have. It's going to be based on how much you actually make. All right? This is also including, okay, because nowadays, right, with the vast majority of people doing Uber, Lyft, Postmates, Uber Eats, all those extra things is going to be considered a second job or a third job if you're doing both, right? And with that being said, now the government is going to be boggling down on that, because now that you're getting multiple jobs, you're earning a lot more money than you should be for a normal regular job. So in this case, this is where you're going to be reporting on your primary job and the earnings for your secondary. And if you have a third job, the I don't know what it is, secondary, triary, I don't know what that one's called, but the third job that you have, you're going to have to state how much it is and which one is your primary one. Okay. Second section is going to talk about your children, and they don't do children as one withholding. They do children as $2,000 per children. Okay, and that's where you can, if you're going to claim however X amount of children you're going to have, you're going to multiply by the $2,000, and then you're going to report how much money do you need to collect or withhold if you have this many children. So here they're putting a dollar on how much a child should cost you per year, and they say $2,000 per child per year, which is pretty low, but that's the assumption. Okay, so that's where you're going to tally it here. And then basically at the end of your form, you're going to tally how much money you're supposed to be receiving, taking your deduction out, XYZ. So this form is a lot more intense, and it's a lot more math involved, okay? And that is what you're going to be totaling up for as of if you get a job as of 2020. So I want you to make sure when you're signing a W-4 form, right, and you're turning it into your employee, this is what you're going to be, this is the form that you're going to be using. Now, of course, if you've had a secondary job or not, before all this happened, you more likely have already signed the W-4 form for 2019, which in that case, it stays the same unless there's something changing within your employment, right, that you want to claim. Maybe this year, maybe last year you didn't have a kid, now this year you do have a kid, so you want to claim it. So again, it is not mandatory for you to report or to submit a W-4 form every single year unless there is something that you want to change in the amount of income tax that you want to withhold. Okay, so just a little FYI, they are very, very different, and it's just because we're living in the age where we can have multiple jobs, okay? And the government wants to boggle down on it and try to take as much money from us as much as possible, okay? Instead of submitting two different W-4 forms or a 1099 form, whatever it is, you could do it all in one. All right? Interesting fact there. All right. So let's get back to this. Okay, so that is mandatory when you have employees. You need to have this form. Right? So now the third one is to establish what kind of payment period you want. So for example, do you want to do it every day? Right? Do you pay your employees every day? I know that Uber, Lyft, Postmates, all those people, they can claim the money they earned at the end of the day. So they can pay their employees at the end of the day, right? But most common one you would normally see would be a weekly, bi-weekly, or semi-monthly, okay? Or in other cases for like agencies, such as like the federal agencies, they would just pay you every month. Okay, so those are the more common ones you will see. Typically, I've never seen anyone that gets paid on a quarterly, so every 3 months they get paid, or every half of a year, every 6 months they get paid, or even worse, just annually. But most cases, when you get a gross income, it will be measured in annual. So every year, roughly, maybe if I'm an accountant, right, I'm supposed to make $56,000 a year. If you are salary based, it's going to be written in years, but you're going to be paid either bi-weekly or semi-monthly. Okay? The difference between bi-weekly is you get paid every 2 months, right? So in this case, you get a total of 26 checks because there are months out there that you'll get 3 paychecks in 1 month. Okay? Every other month, every other week, you'll get a paycheck. The difference between that and a semi-monthly is semi-monthly, you'll either get paid on the 15th or the 30th/31st. So you only get paid twice a month, meaning you only are collecting a total of 24 paychecks, which in this case, depending on how much you work, what your benefits are, this can change. And with the extra week, again, it can change. For monthly paychecks, they're not consistent unless you are salary. Okay? Any questions on establishing the payroll period? Common one you will see is bi-weekly or semi-monthly. Okay? Okay, so now we're going to be moving into how much income can be earned. Okay? So, let's take a note of this. How we earn income is different on how much we actually can deduct or what benefits that must be taken out of, okay? So this is how much money we can earn, right? If you're a wage base, right, you can either have an hourly rate, okay? And if you have overtime, that's going to be considered something that you can earn. If you have overtime or sick pay or vacation pay, anything like that, that's going to be considered income that you earn. Okay, but most commonly you would see would just be the wage rate, which is going to be an hourly rate, especially if you're doing wages, and pretty much, yes. Now again, every state has a minimum wage rate. In the state of Nevada, this actually recently changed. Back in May or June, it changed. But it was $8.25. I believe now it raised up to $8.75, or it could be $9. And I believe they're working their way up to get to at least $10 an hour as the minimum. Okay. But for this class, again, depending on what company you are, the minimum that you can pay your employees is going to be based on the state and what their minimum is. In this case, we recognize it as it's going to be $8.75. Okay. With that being said, it's a requirement as all states to abide by this minimum. Okay. And now exceptions to this minimum are people who get tipped as workers. So here in Nevada, again, we're mostly hospitality. So, for example, I know someone who's currently working and their minimum is $7.25. Because they get tipped as a cocktail waitress, they're making most of their money based off of the tips. And depending on the company, whether they have those tips taxed, then it's going to be contributed to their tax as part of the money. Okay. Any also computer professionals. So anybody that's in the IT field, usually they can get away with that because they could be based on any, what do you call it? They could be based on an hourly rate, right? And they can get more benefits out of it. And also other things too is going to be anyone that does like receptionist desks or any opportunities where they can receive commission, then they'll fall under that. Okay, those are the only people that are going to be exceptions to this federal minimum wage. Okay. And again, for salary base, again, which is usually it's calculated as an annual rate. What you can get here is you can get bonuses or commissions as well as overtime pay, right? A lot of companies, depending on what company you work for, they may offer it to you, okay? And that's just additional money that you can earn upon the money that you've already established at, which is an annual rate, right? So again, I use $56,000. So what that happens is whatever the payroll period is, you're just going to get the same exact check every single paycheck that you get, okay? And it's going to total up the total amount of the $56,000 in the course of how many paychecks that you are distributing, okay? Other things you can earn, again, is bonuses or commission pay, XYZ. So the most important thing is when you have employees is to establish whether you're going to have wages or you're going to have salary-based employees. Okay. Now, we're going to be coming up on employee pay checks. Okay. So other deductions or benefits that can come out of their paycheck. So you have a gross earnings, so the amount of money that you can earn, right? That's going to be your gross pay. Now, this part is actually calculating any deductions that actually come out of your paycheck. So, for example, right, if the company offer fringe benefits, so like, for example, fringe benefits could be, hey, because we are part of this company, we can get you either discounted tickets to either, sports shows, other things here. For example, MGM, their fringe benefit is they can get their hotels discounted. They can get even the show tickets discounted, right? They have that ability, and they even can, if they show that they're an employee of that place and they dine there, they can also use their employee discount. So that's considered a fringe benefit. That is going to be deducted 100% away from your paycheck, because nothing is free. Okay, just because you work for the company, it's going to be considered a fringe benefit, because basically it could be like membership dues, or it could be a package that you have to pay. So oftentimes, if you have a union, that's going to be considered a fringe benefit. All right. Other things such as holiday pay, vacation pay, sick pay, those can be deductions to your paycheck, depending, like, again, for example, sick pay. If they pay you because you're sick, that could be a deduction to you, or it could be a benefit for you. All right. And then other things are going to be retirement plans such as IRAs, right? Or 401k plans. Okay. And then, of course, other things such as usually insurances that are deductions from your paycheck. So if the employer provides health benefits or health insurance, such as either health, eye, or dental, vision, life insurance, then that's going to be taken out of your paycheck. okay? Because they'll never pay 100%. They'll pay a portion of it, and they'll either match you or they'll pay more majority of it. But you may have to pay a deductible to it, okay? And those are things that can come out of your paycheck, okay? And then how to record the earnings. Again, if you have a timesheet, a check-in logger, whatever it is, right? Whatever that you can use to keep track of your activity logs, right? Most employees are responsible to submit their own timesheet if they don't have any. Like, for example, if they have a clock-in tower, they need to clock in, okay? All right, so I'm just going to finish up this last section here, and then tomorrow we could talk about the employer section of how to compute the taxes, okay? So for this example, we're going to talk about the federal holdings, the federal income tax withholdings, okay? So you guys are going to probably know this the most, is the typical tax tables when you are going to encounter filing the federal income tax withholdings, okay? So again, the proper term of it is going to be called the Circular E form, and there are two ways that you can calculate these percentages, right? You either have the percentage method or the bracket method, okay? And we'll talk about that in a second. But usually how you determine the federal income tax withholdings is going to be based on your gross pay after your deduction. So basically, how much money you actually earn, okay? The higher the wages, the higher the tax. Pretty straightforward, okay? And again, there are two methods which we talked about. Again, it's the percentage method or the bracket method. But for the sake of this class, I only want you to learn one, and we're only going to be looking at the percentage method. So again, I talked about the Circular E form, which in class, in the classroom, I have uploaded the 2020 Circular E form, okay? So again, it's looking at tax percentages, and it's going to be based on three things, right? It's going to be based on how often you get paid. It's going to be determined based on what marital status you are, so if you're married or if you're single. And then lastly, how much money you actually earned for that pay period, okay? So again, here's all the tax tables that you will see for both married and single, okay? And the one that we're going to be primarily focusing on is going to be our bi-weekly and our semi-monthly, because those are our common ones that we will see. So again, I'll show you exactly how to calculate each and every single one, but just know that, again, depending on your marital status and how often you get paid. So if I made this amount in this much but not over this much, that will be my percentage. In this case, for example, the very third one. If I'm single, right, I'm going to be taxed at 12%. And again, it's based on your total gross income that you've earned, all right? Minus your deductions and your withholdings, it's going to be that money, okay? The actual money that you are susceptible to the income tax, okay? And when you find your bracket, you find your percentage, you're going to deduct as following, okay? So this is also on the Google Classroom that you can check out. This one is for using the 2019 W-4 form, okay? So again, this isn't using for the new one because, again, you can calculate tax this way, and right now, the 2019 form is the easiest form to use to calculate your payroll taxes. For those who are joining me next year, it's going to be a struggle to teach how to do the 2020 version of the W-4 form and how to calculate the tax upon that. Okay, plus After November, we're going to get a whole set of new tax, federal income tax percentages. Okay? So with that being said, I'm going to go ahead and go over the example real quick, and then we will we'll go ahead and call it a day. Okay? So using the federal circular E form, again, you can also find this at irs.gov. You type in circular E form for 2020. Make sure that you recognize that when you actually look this up, you pull up using the W-4 form for 2019. So depending, again, with the criteria that I've given, this is what it should look like. All right? Now, when we're using the percentage method, this is how you calculate it. You're first going to obviously collect your W-4 form from your employee, all right? And you're first going to determine is how much total earnings did they actually accumulate, all right? Then we're going to determine the total number of withholdings that this employee requests from us, determine our deductions, XYZ. Then we're going to get a total amount of income that is taxable, right? Once we get that, we're gonna subtract. So that's what step 3 is. When we subtract our total amount of withholdings and our deductions, we're gonna get the total amount of income that is taxable. Once we do that, we're going to use our circular E form, and we're going to determine the amount of the percentage that I belong in. All right, and then once I do that, I'm going to go ahead and deduct how much it's listed, and then I determine how much tax withholdings I actually have to subtract from the person's paycheck. Okay, so again, I'm explaining, but let's go ahead and dive right into the example. So number 1, all right, example is L is a single woman with 2 dependents. So she's going to claim 2 people as her deduction, right? And she makes $15.25 an hour, okay? And she works a total of 45 hours this pay period, right? And this pay period is every week. So she's getting paid every week. So step 1 is to find the total earned wages. So in this case, how do we determine this?
Multiply the amount per hour.
Mm-hmm. Perfect. And what do we get here? $686.25 is going to be step number 1. What is the total amount that L has actually earned? Okay. Now, step 2 is going to determine how many withholdings that this person has claimed. In this case, I'm assuming she's going to claim both children or both dependents. So that's 4, okay, if you understand how to fill out the W-4 form for 2019. Her total withholdings is going to be 2, all right? Now, once we establish that, we determine the total number of withholdings or allowances, we call them. Then we're going to go ahead and look at table 6, which is at the very top of the circular E form, which is going to allow us to determine how much one withholding is going to be. So again, here is the table 6 from the circular E form. And we know that because it's based on a weekly payroll, we're going to find weekly. So we know that one withholding is going to cost me $83. Okay? And because I am claiming 2 withholdings, I'm going to multiply these 2 together to get a grand total of my $166. Okay? And step 3 is you're going to subtract your withholdings from your total amount that you earned to get a total amount of taxable income. All right? So in this case, what is my $686.25? Subtract my 166. it's going to be 520.25. This is what I'm going to be using to look in the Circular E form to find which percentage I belong to. Okay? So again, I'm going to go ahead and determine that by using my tax table. So if I know that I made $520.25, I'm going to go ahead and look in here. So I'm in the table where it's a weekly pay. I'm going to focus on single because that's what L is. L is a single woman. All right, I'm going to go down and look at column A. See how much you earned. At least, okay, for sure I earned more than $263, but I don't earn more than that because the next bracket is $845. I actually fall below that. So what section B tells you is, but I don't make more than, in this case, I don't make more than $845, right? My total amount that I did earn was $520. So 520 falls between 263 and 845. So I'm going to go ahead and go ahead and look across to section C. Section C tells me this is the amount that the government's going to charge us immediately. Right off the bat is going to be $19. All right? Now, any money that I've earned in excess is going to be taxed at 12%. All right? And here, this in column E is going to tell me that out of the $263, that is the amount that the government is just going to let us have. Okay? So, now that I see this table here and I know that I belong in $19 at 12% for $263, this is where I'm going to go ahead and start calculating my federal income tax withholdings. So I'm going to take my $520.25. I'm going to subtract the amount that the government's just going to give me, let me keep. All right, so with that, I should get a total of $257.25. This is going to be in excess. All right, and what I'm going to do is I'm going to take that amount and I'm going to multiply it by my percentage, which is 12%. And that's going to give me a grand total of $30.87. Plus, I have to also include the $19 that the government is going to charge me regardless of whatever I made. All right? And now I get a determining number of $49.87 in total federal income tax withholdings. Okay? Any questions in regards to how I calculate this and et cetera, et cetera?
No, ma'am.
Okay. And that is going to be what we're going to stop. It's going to be right here. Okay. Actually, let me see. Yes, let's go ahead and stop right here. So again, this is how you calculate just federal income tax withholdings. Okay. This is only step 3 in employee taxes, right? The next section that we're going to be looking into as far as continuing on is that's not all we tax for the employee. We also have to include our FICA, which is our Federal Insurance Contribution Act, which we'll talk about, and they are percentages that you need to calculate and deduct from the individual's paycheck. Okay, and we'll talk about that tomorrow. All right, so this is just utilizing the Circular E form. All right, using the percentages, and we're doing the percentage method, which we're going to determine which section we belong to in order to properly calculate our federal income tax withholdings. Okay, that's only, again, one portion of employee taxes. Okay, Other than that, does anybody have any questions in regards to this section in chapter 12?
I just have a generic question regarding the form W-4.
Mm-hmm.
Do you happen to have any insight why they changed it?
It's because, so I'm going to go ahead and pause this real quick. So